Happy Friday, team. What is going on? Holy smokes. We got a God candle today in mortgage bonds. Your boy's going to take a victory lap or two today on that one. Derrick Evans here, VA Home Loan Specialist, NMLS 155010. Call, text, email me if you want to buy or refi. Look at my glorious hair today. All I had to do is switch the part and just Vince Vaughn hair, just like that. Now I have a foot-long forehead and then a foot-long rise up here. Look at this hair. It's going crazy. So it's a great hair day. I wore a red shirt, and it worked. Remember we had to switch this up? Well, it worked. I'm going to show you today here. Let's go. We're going to look at this today. Look at some action on in the San Diego marketplace. But we're going to start right here. Oh, man. Look at the God candle we got today. Now, quick recap. I didn't make a video yesterday. Was too busy. Had multiple events back to back. But this is really, we can sum up what's going on right now pretty easily. And I'm going to do that in a visual way. I did this for my Sphere newsletter, which I just sent out today, which is basically just a video. It's not really Sphere, it's clients. It's for clients and people who are pre-approved. And what's up, Heather? So I send that out. It's not published anywhere. It's a little bit more raw. It's a little bit, not that this is really polished, no. But it's something that's just for clients. So specifically with buyers and people who are looking to potentially refinance in mind. We went through this. I'm going to go through this again and kind of do the same thing on this side of it. But just take a look at the gloriousness. I mean, look at this thing. Look at this. So 2 days ago, when I made my video, was after we closed on this day here. You can see, Barry issued a lock alert there. And I said, you know what? I don't buy it. Looks too much like a fake out to me. Look at the trend is higher. Look at the bottom part of the candle. It is an indecision candle. And those haven't worked out well for us. But it just felt to me like the bad news we got from the Fed that day on Wednesday was priced into the market, and this wasn't enough of a move for me to feel like the market was caught off guard by it. Remember when they said they weren't going to taper, and then they said they would, and we get these big, huge, I don't know what you call these, bad guy candles. We got some of those in the past. We didn't have that happen, and this was the actual taper announcement. So it felt to me like it was a sell the rumor, buy the news, which is the opposite of buy the rumor, sell the news, the opposite of the short trade, which can create a squeeze. So I didn't like the idea of locking here, even though we were sort of told to do so. This is me taking my full victory lap right now, team. So I said, you know what? I'm going to hold off. I got a couple loans to lock. I'm not pushing the lock button. I'm going to see what happens. So yesterday we got a nice candle higher. This was a great sign. Not only, we opened higher, we went higher, and we really didn't revisit that open too much. There's almost no wick at the bottom there. I mean, that's a good sign. Even though there's a little wick on the top, and people who are super candle readers don't like that from a bull standpoint. I like the fact that there wasn't much of one on the bottom. We just ratcheted higher. We were just going up. Like there wasn't a retreat and then coming back. It was just up. And then today we get the God candle, 41 basis points higher. We've seen bigger candles than this, but when you hear people say the God candle, they usually are talking about Bitcoin and like a $10,000 candle, which I think we'll have before the end of the year. But when you look at this particular setup, we can really summarize this pretty simply. I'm just going to scoot us back a little bit. Pretty simply, let's look at what's happened here with rates. So from August through September, for pretty much 2 months here, we had a relatively stable range, sideways action. Rates were very good position. We sort of knew where we were at for quite some time. It's really nice in my business to be able to know what rates are. And to not have to guess and tell people, well, they changed. But that's the game, the way the game that we play. So we had that sideways action. Then we got some bad news. Got some bad news about the taper, the inflation. Then we have this sort of downward channel here. And so we moved down, and that of course means that rates go up. So when mortgage bonds go down, interest rates go higher. So we want to see upward action. Look at what we've got now. If you really look at this now, we're channeling higher here in a very strong way. The biggest concern that I have is that R2 here, which we almost touched today. This is sort of like the return to the former support. It's right around there. And that is going to be a problematic area because there was such a consolidation that took place here at this level. So I'm a little bit worried that that's going to be the top. But you know what? I still say let it ride, even though over the weekend. If you got one that's close, if you like a rate, you should lock it always. If you like the rate that you're seeing, you should lock it. If you haven't checked on rates in a while, if it's been a minute, a lot of people who I reached out to today with my client newsletter video were saying, hey, well, what are rates for us today? So I did a lot of rate lookups. And a lot of those rates were a lot lower than when they had been pre-approved. So check back. If you haven't in a while, check back with your lender, check back with me if I'm your lender, and just see what your rate is today, because not everybody's rate will move the same. We've seen a lot recently where lower credit score rates are moving and higher credit score rates aren't. Will that correct itself today? You just have to look at your rate sheet and see. Everybody's will be different, but it's a great sign. Now, I have no idea how this is possible. I cannot believe anyone's buying bonds. But also, you have to think, with all the inflation data, with all the bad news, who hasn't sold their bonds yet? That's the thing you forget about. It's like, well, who's buying? But wait a minute. No, the question is there still big sellers in there? And the truth is, even though the Fed is cutting back $5 billion a month, they're still buying billions and billions of dollars worth every month. They're still a huge buyer. The taper is a slow thing. So there may have been an overreaction here by sellers, and the sellers may have just vacated and left the building. If there's no more sellers left, then what happens? Price has to go higher. That's what we're seeing in real estate right now. We're going to take a look at real estate. I'll come back to this. Take a look at real estate briefly here. A couple things. I'm always looking at price per square foot. This is how you measure what's really going on in a market, because there's too many variables between properties, looking at median list price and all that different things, and median or mean sold price. You can look at that, and it is a measurement, but for me, it's not the one. Let me get myself out of the way here. Can we do that? Yeah, do it like this. Boom. So market action index, I like this. Altos Research provides this information. It is free. If you have like a Facebook account, you can just sign in. Easy peasy. But it's great because they give you tons of information. So let's look at price per square foot in mid-July. Mid-July, folks. That is less than 4 months ago. We were $585 a square foot. We're at $622 now. That's a nice chunk higher. I mean, it's like, what, 8% higher? Something like that. 8% higher in less than 4 months. Average days on market. A lot of people will look at this and go, see. But what is really going on here? We were at 30 days, less than 4 months ago, 3.5 months ago, and now we're at 42. While percentage-wise, it looks like a big increase. All this is there's a few dummy sellers who hired dummy agents at overpriced properties, and they're just sitting. There's a few of those out there. They're out there, and there's always some. There's a lot more now because the level of greed that we're seeing from sellers is, frankly, it's disgusting. It really is. It's gross. It's so gross. But you know what? It's actually working for most of them. That's the thing that's terrible about it. I've got a good friend in escrow right now. Property needs pool work, foundation work, 20 grand in termite. I mean, it's like $40,000 or $50,000 worth of stuff. The seller offered him $3,000 on the repair for request, $3,000. So, and you know what? They still might get it. They still might buy the place. I told him not to. I told him to walk from that, both middle fingers up. But you know what? That is somewhat of an emotional response, because the reality is, what else are you going to do? What are you going to do? Is there another place? Do you have another option that meets your needs? Most people don't right now. It's hard to find one that meets your needs, much less to sit here and be, picky about which one's this or that. They have the money. They can do it if they want to. We'll see what happens. Price decreases, you're seeing those go up, and that's a function of this, but that's also why you're seeing relisteds go up. So price decreases 21%, 3.5 months ago, we're at 31% now. So 10% increase. It's pretty significant. But it also makes sense for what's going on. The market's finding itself, and that needs to happen. Relisteds from 12, or let's call it 13% to 20%. That's what you're seeing there. Some relisteds. It's really not a bad strategy if you were kind of forced to put a property on the market for a price. If you're an agent, you put the property on, you're like, listen, the seller just wants to do it this way. I'm going to let him, I've told them this isn't the right way to do it. They're going to do it anyway. We'll list it for their price. If it doesn't work, we're going to take it off. We're going to do it my way. And sometimes you have to, as an agent, you have to negotiate that with the seller. Totally understand that. And so you end up having to relist it. And we're seeing that happen a lot more. That's all that is. But notice this. These are two important stats here. Inventory. 3.5 months ago, 564 homes, now down to 480. Look at the trajectory, just lower, 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 lower. How low can you go? It's like we're playing, oh my gosh, what's that? Limbo with the property. Like, how low can we go in inventory? It's just insane. Watch rents though. Watch rents. Rents, $2,950 3.5 months ago was the median rent. $3,200 now. And by the way, this is still way low. This is going to keep going up. Even if property values stay flat for the next 5 years, you're going to see rents go up every single year. And a lot of landlords are just not moving. They just don't know yet. They don't. When you're a landlord, you don't pay that close of attention in most cases. So it's like, hey, do we have a good tenant? Are they paying the rent on time? Oh, cool. That's all I need. I got a good tenant in there. I don't need to mess with it. But as those properties get sold, new ownership takes over, or as tenants move out for whatever reason, new tenants come in, maybe they'll get privy to it. And I think you're going to see that happen. Market action, look, you see it's declining. So back in mid-July, we were at 92 in the market action index, which is super, super strong, insanely strong seller's market. It's actually got all the way to 99 at one point. And now it's just sort of leveled down to 82. We look at that and we go, well, look at the decline in the market action index that shows the market is softening. But does it? That just means it's not as insane, but this is still what's considered to be a strong seller's market. 82. One of the things I like to look at is where was it the previous month? It actually increased. We were at 81 last month, now at 82. So is the market heating back up? No, it's just sort of finding itself. It's pendulum swinging a little bit, but just note that still a very strong seller's market. We want softening. We need softening, but it's not changing the movement in price per square foot. It's not changing the decrease in inventory. That's not changing. So what you're actually seeing, although it may not look like it, you're seeing like a somewhat softer market for buyers, but there's still very little on the market. Just a quick look at condos too. I like to pay attention mostly to detached, but the condos side has heated up finally. This market action index was in the 70s for a long time. In fact, the last couple times we looked at it was in the 70s, now up to 82. Also a natural progression, median up to almost 600,000 for condos. But notice the difference is you're seeing increased days on market here. Price per square foot was $585 back in mid-July. $578 now. So you're not seeing a huge increase in price per square foot there, even though it's become a very, very strong seller's market. You are seeing more price decreases. You are seeing the decline in inventory, and you are seeing the big increase in rent. But you're not seeing that huge increase in price per square foot. That's why I always pay attention to that one, because if you looked at everything else, you would say, oh man, condos are insane. No. Some of the data shows that, but where the rubber meets the road, price per square foot, you're seeing that's a lot more manageable marketplace. That's a lot more flat, a lot more makes sense in marketplace. It's the decrease in inventory that's really building this up. I mean, look, we were at 546 just 3.5 months ago. It's just losing all the inventory. It's just going away because people are moving from the idea of a single family detached to a condo. That's what's happening. All right, couple things in the news. Let's see here. Let's jump over. Happy Friday to you, by the way. Happy Friday to you. This is live. You can comment. Wow, look at that candle. True. Drop your comments. Say what's up. Love to hear from you. Let's take a look at a couple things. Dow Jones set a record today. I'm not sure if the S&P did or not, but the S&P's up for 7 straight days. Just lots and lots of green, like we talked about earlier this week. Congress and the Federal Reserve, everybody owns stocks. Now we know why the stock market can't sustain any kind of correction, because the powers that be are pointing that sucker higher. It's good for us too if we're invested in it, but that's just the fact of what's going on. Oil back up. a nice little day today, back over 81 bucks. Gold is, let me guess, 1800. Yep, 1820. That's the highest I've seen gold in a while. Just barely moves. It's like a snail. Crypto, you see Bitcoin, another flat day. Bitcoin is consolidating in the 60,000 range. 60,000 is the new buy marker. It's just poised to make another leg higher. Ethereum is unstoppable. XRP is something a lot of people, there is a religious following for XRP that is so interesting to me. It's just so interesting to me. A lot of people think that XRP can go to $10 and this and that. Yeah, maybe, but I don't know. It's been hanging around $1 for a long time. I remember when it was 20 cents at one point. I don't know what to tell you about XRP, but let's talk about some of this stuff here. So this to me is a little bit more concerning. Real estate brokers brace for, quote, flood of wealthy buyers from overseas as travel restrictions lift. Come on now. Are real estate brokers out there really bracing? I mean, did you guys get your shields out? Like, oh man, they're coming. No, that's not what's going on. Money's been coming in from overseas forever. It has been more difficult for some people who are trying to move with cash, trying to do things specifically. But the travel restrictions that are lifting will probably cause some additional transactions to take place. But I don't think there's a flood coming. And the fact that they're framing it that way actually makes me more bearish on the concept, because what we normally get here is a lot of real estate bearish talk because these are the stock people. But there's some data in here. I'm going to put the link in it so you can check it out if you want to. Buying a home unmarried, what to know before signing the deed. This is actually, I would recommend really looking through this one, especially if you are, going to buy a home in an unmarried scenario. Basically what happens is you buy the home, and you can obviously buy a home with someone who's not your spouse. Now, if you're both on the loan, then you both have to be on title. However, if you had, let's say, domestic partnership, whatever you want to call it, someone who you're not married to, but someone who is essentially your spouse, and you don't want them on the loan, you can still put them on title so that they have ownership interest. Because ownership interest is based on who's on title, not who's on the loan. But if you're on the loan, you have to be on title. However, if two people are on the loan and you add a third person to title, now all three of you own it, even though only two of you are on the loan. So when you're unmarried, you basically just have to treat it almost like you're buying with one of your friends, one of your buddies. Like, okay, this is how we're doing it. You want to make sure that you have the correct vesting. Okay, I'm going to include a link as well in here today that explains to you the different vesting options that you have when you buy property in California. Now, it's always best to ultimately have the property and the title put into a trust, or if it's an investment property, an LLC, one of the two. But if it's your own primary residence, you put it in your trust. Okay, you need to put the title in the name of your trust. That's important. If you have a trust, but you don't put the property in the trust, then it's not in the trust, and therefore is subject to probate, etc. So just a quick lesson on that. Vest it properly, know who's on title. Ideally, put the title on your primary residence into a trust that has all of your other stuff dialed in. Those are cool. A couple of good pieces of advice in here, but that's what you really need to know. Here you go. You've been wanting to know, where's the silver lining in Zillow's iBuyer exit? Open door shares soar as investors predict gains in home buying market after Zillow's exit. Is anyone paying attention at all? Like, why are they calling you to? They're trying to make it sound like Open Door somehow is going to benefit from Zillow's exit. But recall, the properties that Zillow was buying, they couldn't move them. In other words, they weren't buying the good ones, right? The good ones are the ones that you buy at a discount and you can sell for a profit. That's not the ones they were buying. The ones they were buying, they were trying to turn around and sell, and they weren't making money. That was the problem. So if Open Door just turns around and buys all the properties that Zillow was buying, is that really good for them? I don't think so. Certainly doesn't seem like it. Listen, Open Door in some of these big investor flipper type companies, there is definitely potential there for them to do well. And some of them are doing well. The biggest thing is you have to buy it right. Any investor will tell you you make your money when you buy it. It's all about buying it right. And if you buy it right, you really can't compete with retail buyers. They're going to pay more. They want to live there. It's more important to them. They don't need to sell anytime soon. They don't even care. They're not even thinking about selling. As an investor, all you're thinking about is when you go to sell it, how much am I going to get? And how can I get to a price that's profitable for me on the purchase? So while there is definitely a place for this, I don't think Zillows Exit has anything to do with anything. All it is it's just a big stub of the toe for Zillow. It doesn't make Opendoor worth more money. It doesn't make any other iBuyer company worth more money. It doesn't make any other real estate company worth more money. All it might do is free up some homes for actual home buyers to purchase, which is good. It's good. And Zillow will figure it out, guys. They have a lot of things going for them. There's a lot of really good things about Zillow from a consumer perspective, as far as their website, how to interact with it, how to use it. For me, it's second fiddle. I always go to Redfin, but if I'm looking in some of the markets that I track in like Missouri and so forth, Redfin doesn't cover it. So I got to look on Zillow or Realtor.com. And I think that Zillow is probably second fiddle for me. Actually, probably third. I'd probably go Redfin, Realtor.com, Zillow. That's actually more realistic of how I use them. But it's still useful when it's there. And people do use it a lot in some of these smaller areas where Redfin and so forth aren't as big of a deal. They'll use it to list rentals. They use them to list their homes for sale by owner and all kinds of things. So Zillow has a place in the market. They've mismanaged their connection with the real estate community. And if they can get that figured out, they can absolutely murder. So we'll see. So happy God Candle Friday. If we zoom in on this, just shows you how much more epic it is. Huge God candle today. 41 basis points up on the 2.5% coupon. Really good day. Check rates. If you haven't checked rates lately for your refinance, check them if you're pre-approved, for a purchase, and maybe you're getting close to a contract, getting accepted or something like that. Let your loan officer know, hey, I know rates took a dip. Want to get locked in ASAP. You can't get locked in on your purchase until your contract is accepted and fully executed. But that said, you can be ready. You can be poised. Who knows what Monday will bring? I think we're going to see another good day on Monday, maybe the last one in this little run before we kind of go sideways for a bit. But I think we're going to see another good day on Monday as sellers have clearly gotten it all out of their system, and no one wanted to carry into the weekend. So that's a good sign for us. Everybody, have a tremendous weekend for yourselves. Share this video with your friends. Help make them smarter than everyone else, and I'll see you all soon.